Hello, I'm Piyush Dave, a fintech professional, and I'm here with one more algo trading method using VWAP. VWAP is volume weighted average price. It uses both the things. First is the average price. The second one is the volume at which this average price has been calculated. The strategy is very simple. First, we will try to calculate the VWAP. If the price is below VWAP, we consider it as an undervalue. And we are going to long the position. And if the price is above VWAP, we consider it is as overvalue. And we are going to short the equity, or the short position will be taken. So the logic is very simple. First, calculate VWAP. The price is above VWAP, overvalued, just short the position. The price is below VWAP, undervalue, just long the position. But there are multiple things which need to be considered before using VWAP. So first, we will try to understand how the VWAP is calculated. Now, the simulation which I created to understand this VWAP method, in which the one quantity is being changed. Now, for this tick, there are 6 ticks we have to consider. So, first tick price is 1000. The second tick price is 1003. So, the VWAP is addition of both of them divided by 2. But actual VWAP is slightly different in the calculation. Now, for our case, we have taken the 6 ticks. No volume is considered. The volume is considered to be as 1 only. What does it mean? For each tick, we are buying or selling only one quantity. But in actual case, in the VWAP, the volume is also considered. Let me show you that calculation first, and then we will come to our calculation. So in original calculation, we consider volume as well as price. So let me show you an example to understand the exact VWAP calculation. In my case, in the algo, I have taken the volume as constant value, like volume as 1, volume as 1, and volume as 1. Now, why I have done that? So that the calculation become very simple. But in actual practice, this volume is also been considered. So like on 100 as a price, we have volume of 10. As 102 as a price, we have volume of 50. 101 as a price, we have volume of 20. So the VWAP calculation, first we will find the average of the price. So 100 plus 200 plus 101 divided by 3 is basically the value which is come as 101, is the average of this price. Next, we will multiply each price with the volume. Like here we have 100, volume is 10. So this is the first tick value. This is the second tick value. Now what we are going to do? We are going to find out the sum of all this. 1, 2 and 3. So this is the total sum of price multiplied by volume. Each price multiplied by volume. And then we are going to find out the total volume also. So the real VWAP will be the summation of price multiplied by volume divided by the total number of volume. Now this is a real VWAP. In our case, we have considered all the volume as 1 only, so that the calculation become simple and we can focus more on understanding the algo rather than making the complex calculation. So here, in my case, I have only considered the price with the volume of 1. Now let's go ahead and try to understand this. So real VWAP, I already shown how the real VWAP is calculated. Now in our case, each of the price is trading at volume 1. So that's why we are going to add all this value, divide by the number of reading, and that comes out to be the exact VWAP after 6 tick. In this, the volume is considered as only 1. Each price, the volume is 1. Okay, once we do that, we get the VWAP. If the price is below the VWAP, we are going to understand that, okay, this is a fair price and market may come back to the VWAP. Normally it happens that market always return to their VWAP majority time. If there is a major panic, so panic is always on the downside, and if it is a good news, then good news is on the upside, then market may go above and below VWAP, which might be a extreme. So on that time, the VWAP get failed. So we are going to understand that also. What if the VWAP get failed? Next, in the short position, if the price is above VWAP, we consider the price is expensive. Market may come down. So we are going to short the equity or future, whatever may be the asset you are working with. Now, in the warm-up process, we are going to collect the 20 ticks. So the VWAP will be calculated for a 20 ticks. No trading during the VWAP, no trading during the warm-up. We are actually calculating the true value of VWAP for 20 prices. Once we collect this price, the trading is going to start. Now the logic is very simple. In the range bound market, it works very powerful way. Sideways market, it works very beautifully. Low volatility environment, VWAP is the best method. It's the best mean reversal method. But there is a negative side also of the VWAP. If you are using only VWAP and you have long the position when the price is below VWAP and it is continuously falling down only, and you are in a long position, then you might have a lot of loss, because VWAP, the algo is going to take the position of a long position when the price is below VWAP. And let me give a simple example, like price is 1000, VWAP is 1000 and the price is 990 and you are going to buy. Again it come to 980, again it 970, 960, you are in a buy position of at 990. So there will be a huge loss to you at this level, because the algo is very simple, and that is it buy below the VWAP value. So there will be a multiple loss possible. VWAP is slightly slow, delay signal, and it's a slower trend detection. So that is also one problem with the VWAP. So VWAP normally combined with other methods also, so that we get a right way to work with VWAP. Okay, now coming to the thing with the VWAP, there are two more problems. The false signal might come in the volatile environment, and the second problem is no trend filter is very dangerous. Like on a bad day, if market is going trending upside or downside continuously, then VWAP strategy get failed. Okay, there are a lot of negative points about VWAP, but still, why VWAP? You might be thinking, why VWAP? If we use a row VWAP, then maximum time we win, because market normally return to its mean value. Only in the bad days that might happen that it won't return to its mean value. So normally market have a trend to return to a mean value. In our algo, what we are doing, we are collecting 20 prices. check VWAP, price above VWAP long, price below VWAP, price below VWAP long, price above VWAP short. The target what we get profit is 0.5%. The SL also I kept here 1%. Stop trading after 5% of total drop down, or what we can say drawdown in the capital. Show the realized and unrealized PNL, and 100 seconds after we are going to see what is happening with actual PNL. So summary is a fair value calculation. If the price deviates from VWAP, we are going to take a trade, but this strategy does not work if there is a strong trend on the upside or downside. Okay, in the future, what we can do with using a VWAP plus, we don't want this VWAP to give us big loss. So we can add a trend filter also. If the trend get changed, VWAP might get fail. So trend filter will tell us and save us from this kind of a trending environment. We can use a ATR also. We can check some of the candle logic also. So if this VWAP get mixed with all these methods, we get the best output. Now I'm going to show you the actual working of VWAP. But in my calculation, I already told you that I'm going to use volume as 1 only. And the actual calculation also we have already discussed how VWAP is been calculated. So for our case, to make it simple, we consider the volume as 1 only. Now let's go ahead and try to see this in an actual working environment. So this is my exchange. It keep on changing the price. We have no control over this price. So once the exchanges start, it keep on changing the price. And this price change is so random, we have no control over it. Once this exchange is set up, we are going to start with Algo also. Now this Algo is been written in a way that we are going to understand the VWAP. Okay. So first in a warm-up phase, we are going to collect the prices. Let me adjust both the windows side by side so that we get both the output at the same time. So now one price which is continuously updating. This is the price from exchange. We have no control over it. And this is a price which has been collected from the exchange. And we are calculating the VWAP also. The volume is considered to be as 1 for each tick. So for our Algo, we have considered volume as only 1 tick. Okay, now the warm-up phase is completed. We are in a live trading environment. We go for a long position because the price is below the VWAP. VWAP is at 107, 1007, and we are on a long position at 1004. The current price is 1003. We are in unrealized loss of 500. Okay, if this reach to 1%, we are going to book the loss. Okay, the long SL is hit. We have booked the loss of 1000 rupees. It's completely okay. So we have the VWAP at 1004. Okay. Again, we realize profit is changed because we book one more profit in the long position. Okay, currently we are in a long position of 1003. Okay, we book one more profit over here. Okay, the summary is at 99 rupees loss after 100 seconds. The unrealized, we are in a short position because the price is above VWAP. The current price is above VWAP. The VWAP is at 1005. Okay, we book the profit. Again, we are in short position because the price is above VWAP. So currently we are in the realized profit of 300 and unrealized of 200. If the price go below, okay, we have booked one more profit. We enter into the long position because the price is below VWAP. Okay, we are in a realized profit of 900 and unrealized profit of minus 400. The price is below VWAP. We are in a long position at 1002. The price is below VWAP, so that's why the long position has been taken. We are going to book the stop loss for sure. 1% is okay. We are in a again we have booked the loss. The unrealized PNL is minus. Realized PNL is minus 200. It's completely fine. The price is below VWAP. We are in a long position is 99988. See, if the market is trending in a sideways, it works very beautifully. But if market is trending on one side, okay, we have reached the target. Okay, the realized PNL is 500. Okay, one more time we are in a long position because the price is below VWAP. The VWAP is at 1000. We are long position at 994. Okay, the realized profit is 300, unrealized is 500. See, the beauty of the algo is VWAP is continuously changing per tick, and if the price is below that, we are going to long or short position. The long position SL is hit. It's completely fine. Okay, now, okay, target position is reached. So we are in a realized profit of 1000. See the beauty. The price is trending in some range. So that's why the VWAP is working very nice. But if this price is trending either on a plus side continuously, then we might have a loss. So that's why we need to combine VWAP with one more method for sure. It's working very beautifully. Okay, long SL is hit at 700 rupees. Okay, it's completely okay. We are in no profit, no loss condition. Okay, sometimes suppose if it is working well and you are getting a realized profit, very good realized profit, then you may stop the algo. I keep on running this kind of algo for a longer period so we can understand the winning rate of this. This works well when you run it for a longer period. Plus, if the VWAP is combined with other methods, it works really beautifully. So I hope the concept of VWAP is clear. I'm going to combine this VWAP with one more method so that if there's a worst case scenario happen, then we have to save our capital. We are in a realized profit of 500. So I hope the VWAP concept is clear and it is working beautifully in a simulation environment. Thank you very much.